Got some doubt about the property in Winterfell. We decided to sell the property last month. How do we account for it? Is there a different accounting practice from what we usually do?
Yes, that property would be accounted according to the guidelines given to us by IFRS 5, non-current assets held for sales and discontinued operations.
I haven't heard of that standard. Could you run me through it?
Take my phone and read this article. This specifies the recognition criteria of a non-current asset held for sale.
1. Is available for immediate sale at its present condition. 2. The sale is highly probable. 3. Management is committed to sell the asset. 4. An active program to locate a buyer is initiated. 5. The asset is being actively marketed for a reasonable price. 6. The sale is expected to be completed within 1 year since classification. 7. Unlikely the plan would change and withdraw the asset from the sale.
The property in Winterfell will be categorized under non-current assets held for sale. We will be selling the property as it is. We have already advertised and quoted a reasonable price. The property would be sold in the coming months and the property is of no use for the entity. Highly unlikely that we will reverse the decision to sell the property.
Do we just transfer the carrying value of the entire asset as the investment held for sale?
Not really. We need to compare the carrying value and the net realizable value of the sale, from which we will select the lowest. The net realizable value is the sales price minus the cost of selling it.
If the carrying value is the lowest, seems to be no adjustment needed. But what if the net realizable value is the lowest?
Correct. If we are going to use the cost model, then if the carrying value is the lowest, there won't be much of an accounting adjustment. However, if we are using the revaluation model, then we would need to revalue the asset before we look into the lowest of the carrying value and the net realizable value. Now, if the net realizable value is going to be lower, then we would have a loss, and this loss is to be shown as an impairment in the statement of profit and loss after settling for any previous revaluation surpluses.
Do we keep depreciating the asset as usual?
No. Once the asset is classified as investment held for sale, depreciation ends. So there is no need of calculating the depreciation for this asset anymore.
In the SOFP, we may have to show this property separately, so that we could inform the users that this asset is held for sale, isn't it?
Yes, you're absolutely correct.